So I'm going to show you here a simple way to catch some pips, basically. This is on the 1 hour chart, and it's a pretty simple strategy. So what you're going to do is you're going to go to indicators and add a moving average. You're going to click this one down here, the third one down under the technicals. You're going to change the settings on it to 60, like right here, and that's it. Then this one right here, the order blocks, you're going to go here, you can type in market, structure, if I can spell, and order block. Right, oops, there we go. This one right here by Rec, I'm not really sure, but it's this one. The fourth one down under where the lock is. Yeah, 1, 2, 3, 4. I'm going to pick that one. No changes will be made to that one. Now, with this, you need a currency pair that is going to range. One that just goes sideways is not going to work for this. So let's look on a different pair. Let's try USD/JPY. All right. Not bad. Definitely doable. Like that. There's definitely some spikes and some eye pokes there, but that will happen when news comes out, no matter what. Oh. See. All right, there we go. Just gonna go like that. Okay, so what you want is to be above the 60 EMA. Then you're gonna wait for a pullback, and then it's going to have to close above the 60. So then we're going to go like this. And also with the order blocks, it will tell you this is MSB in green, market structure break to the upside. So you could take a long right here. This would be 228 pips approximately. Yes, you had the spike here, which would have freaked people out. So you just kind of want your stop loss to be maybe like the last swing low right there. So remember, 47 pip stop loss. You have to know your lot sizes and know how much profit you're going for. So you're only risking whichever a type of account you have. If you have a funded account, then you need to know how much you're risking. So just be aware of that. So 228 pips. So now we'll see kind of how long this took. This would have been pretty simple. So this would have been 11 hours. So, and obviously you could have counted the bars there because you're on the 1 hour chart. Duh. So 228 times, say you're going to do super conservative at 0.5 lot size, and which is $5 a pip. It's $1,140. Most people make that in a week, 2 weeks. You know, that's 11 hours. So that's kind of cool to have that running a profit. And then, again, like the only thing here would have been the spike down, but I'm assuming the time, Tuesday at 4, that would have been, something would happen there. But that is showing that that is a rejection to the downside, and it's going to keep going up. So you're going to stay in the trade as long as it's staying away from the 60 moving average and obviously continuing up. Also, how you could have got this trade is trend lines. Trend lines are super easy. You would have drawn a line there, hit that red candle, the wick there, and right through. And then once it closed above that and closed above the 60 moving average, also you have the market structure break, green, to the upside. You could have entered this trade, right? Pretty simple. Obviously, people are like, you know, what if it turns around on me? It could. It absolutely could. So again, there is your a trend line that you could do. But the only thing that this trade that I'm going to show you here would break. Yep, so it closed here. It's not below the 60. So this trade I would not take, right? Yes, it's like to the downside, but we want to know that it's pretty much going to keep going in the kind of way, the upside that we want. Like, by all means, you could take this trade based on the trend line. You can forget everything else and just trade trend lines. A lot of people do. It works. There could be some pullbacks, but that's a given. That's going to happen anytime. So also, another trade you could have taken here is once this green bar closed, and yeah, you got a red bar here, but we're above the 60. You could have put in a buy order here. If you would have stuck with this again, another 293 pips. So obviously, this trade probably took a bit longer. Yeah, a couple days. And again, you would stay in this trade. Like, you kind of see it's riding along the 60, and then we had a good push upwards. So 3 days. So again, let's say, so times 293 pips. So again, 1400. Yes, it's a longer time frame than this one. But again, if you have this one, you're done. Then you're in this one. You could have other pairs going. So yeah, this one's going to take 3 days. Give or take. Depends if you stay in it. But you may have other trades going too, right? This is, the pound New Zealand is a good ranging pair. So, and obviously here you see you have an order block. So I would have gone right here long. Now obviously right here, you're not going to grab as much. But grab what you can and grab what the market gives you. The market is the market and it doesn't care about anyone. So obviously 100 pip stop loss is not reasonable. So depending on your risk and your percentage and whatnot, what you're doing, if you have a funded account with a prop firm or you have a personal account, just manage your risk accordingly. So again, we could have traded this upward swing with a simple trend line. And so we're above the 60, above the trend line. There's a bullish order block right there. We're going to take a long. Maybe I would have entered here and, you know, kind of went sideways a bit. You kind of get freaked out and you're going to exit. Take your profit. 200 pips. Not bad. You can have your stop loss cover like the moving average if you really want. Just depends on what you're comfortable with. So again, you could have drawn a trend line right here and gone like this. We're going to hit there. And you could have taken this a little short, but I personally would not have. It's above the 200 and you really don't know if it's going to turn around on you. And then we go sideways for a bit. So that kind of sucks, but it doesn't matter. You're going to get that anywhere. Any pair could do that. So again, a lot of buys here. Long positions. Take this long, and I would have grabbed another 272 pips. So, and then your stop loss can cover your moving average. So 34 pip stop, that's not bad. So then you would have had 272 times our $5, which is 0.5 of a lot size. So you're half of a full standard contract. $1,360. So, not bad. Date, let's see how long this took. 1 day. Cool. It's easy money. And this is like the simplest like strategy. Like you could just trade trend lines and the order blocks and kind of be aware of the 60 moving average, right? And that's it. Nothing too complicated. You never really know when to get into trades, when to get out, what it's going to do, but the market's going to give you what it's going to give you, and you just have to hit the buy or sell button and take your profit. Take it where you need it. So, yeah, and that will be it for today, and I'll see you in the next one.